Good afternoon. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Fatakia. With me, as always, is Vivek Iyer. Vivek, good afternoon. We started off the session well, but it seems like there's been a slight cool-off from the highs of the day. But then it's par for the course, right? We've been moving non-stop for 6 straight days. Some bit of consolidation now.
Absolutely right. Good afternoon, Hormuz. Like you mentioned, on par for the course, given the fact that we saw 6 straight sessions of gains that ended yesterday. Today we saw a very strong open, a little surprising, managed to outperform in the morning. But post that, what's actually transpired is that the mid-cap and the small-cap index have seen significant profit booking. Small-cap index now down almost 1.7%. So that's a bit of a significant sell-off. But still, we've seen almost an 8 to 9% rally in just the last 6 trading sessions.
Absolutely. And there's a lot lined up on the show as well. So we'll take you through the top headlines then that are lined up at 1:30 this afternoon. There's some bit of profit booking coming in for the broader markets after healthy gains in the early session. The Nifty Bank is in the red while the mid-cap index is underperforming with gains, cuts of anywhere between 1 to 2%. The Nifty IT is bucking the trend.
Cement stocks climb on the back of sectoral upgrade by UBS. The brokerage believes that the rough patch for the cement sector is coming to an end and upgrades UltraTech, Ambuja and Dalmia to a buy rating.
Donald Trump has threatened a 25% tariff on any trade with countries that buy Venezuelan oil and gas. This would impact China and probably India as well. Analysts at ICICI Securities, though, do not see a major impact for India or Indian companies as the quantum of imports from Venezuela is low.
QIP's galore on Dalal Street as Restaurants Brand Asia launches a 500 crore QIP. Central Bank of India launches a QIP to raise close to 2,000 crore and Punjab and Sindh Bank launches a QIP to raise close to 1,600 crore rupees.
And Kotak Institutional Equities says that the Indian CRDMO market is expected to quadruple over the next decade. It receives a buy recommendation on Piramal Pharma, Syngene and Sai Life Sciences.
Welcome to Midcap Radar. Like we just highlighted, today is a day where you're seeing quite a bit of consolidation emerging as far as the broader end of the markets are concerned. Whole host of stocks are seeing significant profit booking. One sector, once again, that's in focus on the back of worries of tariff is actually the entire pharma pack. So today, the pharma pack, barring a few select stocks, the entire pharma pack is actually seeing quite a bit of a sell-off. Names like Sun Pharma, Aurobindo, Dr. Reddy, all of these stocks trending and trading near the day's lowest point. But Hormuz has stepped to the wall. Hormuz has been looking at the broader end of the markets. And Hormuz, please highlight, which are the top movers over there.
It's a shade of red across the broader markets, and that comes after a swath of green that we have seen over the last few trading sessions. But we'll start off with the losers today for a change in the broader markets, and there are a lot of them. And Dixon Technologies is one as well. It's correcting significantly from the highs now at the lowest point of the day, 5.5% lower there. Zomato too, seeing some bit of profit booking in today's trading session, actually continues to grind lower, but it's still not managed to break below that 200 marks. Another 5.5% gone there as well. MQR Pharma, Himadri Chemicals, all of them at the lowest point of the day. There is some selling pressure that is also being seen in a lot of PSU banks in today's trade, and most of these are the ones where there are QIPs that are open, Central Bank and UCO Bank in particular. These two, and also all of them are down to the lows and down between 3.5% to 5% in today's trading session. A couple of companies that have been in focus because of the order wins in today's session. NBCC won a 658 crore order, still trading with some bit of pressure today at the low, still 2.5% down. And Kalpataru Projects also won significant orders, taking the total order inflow close to 25,000 crores for FY25, still holding on to gains of around 2%. And lastly, some stocks that are bucking the trend in today's session on the back of strong volumes, of course. HEG and Graphite India, both of them continuing to surge, 11 and 15% higher now on HEG. Blue Dart and Fine Organics too, seeing a good session so far in an otherwise market, in a broader market that is correcting in today's session.
Absolutely right. Thank you so much, Hormuz, for taking us through the list of movers as far as the broader end of the markets are concerned. But moving on, it's a very good time to get a technical check on the market. Let's now welcome Srikanth Chauhan from Kotak Securities. Good afternoon, Srikanth. Thank you so much for joining us. Would you call this as a slight correction, a bit of a consolidation before the next move higher, or are you worried that markets could fall from here on, Srikanth?
Good afternoon, Vivek. Good afternoon, Hormuz. Yes, for Nifty, I can say that it's a short-term correction that we are going to witness maybe for next 1 or 2 days of time. But the base part and the most, we can say, the crucial part that the market did in the current run-up is that it has broken almost all its important levels except 200-day simple moving average, which is around 24,000 levels. But in this up move, the market has broken the level of 100 days as well as 200 days exponential moving average, which is positive. So now that particular level, 23,400 is going to act as major support for the market. And on monthly basis, the market has broken its previous highest level. I'm going to say the highest of the previous month. So which gives more comfort to traders. And it clearly then suggests that in case if there is any correction in the market, which is like going to come because the market is now very close to its overbought levels. Also, and most of the stocks are turning after hitting their important resistance levels. So broadly, I am of the view that for next few days, we may see the market between the range of maybe 23,500 and 24,000 on the higher side. But the strategy should be to buy on dips, and we should look for adding some mid-cap stocks at these levels to take or to create some long positions.
So which are those mid-cap stocks on your radar, Shrikant?
Afternoon, Horbas. See, in that space, I would like to go with few pharma companies because most of these stocks are showing some extraordinary strength. They have broken their important levels, specifically stocks from the CRDMO baskets. They are showing a lot of strength. And in that space, we like Piramal Pharma, which is currently around 227, 230 levels. There I'm expecting stock to move towards the levels of minimum 260, 265 in the near term. And if there is a short-term view, then one can create long positions with a stop loss close to 210. The other stock which we like is Chambal Fertilizer. And if we consider its technical formation, then it has broken the important resistance level at 570, 580, and it's a perfect bookish pattern. Based on that, I'm expecting stock is moving towards the levels of 700. Currently, it is around 610, but it is advisable to buy between 620 and 590 levels with a target of 700 on the higher side.
Thank you so much, Shrikant, for joining us. Piramal Pharma, doing very well in the session today. Also, Kotak Institutional Equities, that particular arm also initiated coverage on the stock with a buy rating. On the back of that, Piramal Pharma up almost 5%. But it's now time to slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, it's now time for a CNBC-TV18 exclusive. Yash joins in with more details on Star Health.
Well, that's correct, Vivek. So what we've been able to pick up from our sources is that the insurance regulator very recently conducted certain, inspection when it comes to about 8 to 10 general as well as health insurance companies. The matter of the inspection was to see how these companies have been handling their claim settlement processes. Star Health was one of those companies where inspection was done. As I said, it concluded about a month ago. Now, what we've been given to understand from our sources is that as a part of its initial investigation, after the inspection was conducted, there have been certain serious lapses which the regulator, that is IRDAI, has found when it comes to the claim settlement practices at Star Health Insurance. When I tried to understand more in terms of what are the areas which have been inspected and are being investigated where these lapses have occurred, essentially what I've been given to understand is that this includes areas like the claims repudiated, which means not settled by Star Health Insurance and rejected. It also pertains to areas like the average time taken to settle claims, also the deductions which Star Health has been making when it comes to the entire amount which needs to be settled as part of these claims. All these areas is where the regulator has found certain lapses when it comes to Star Health Insurance. What we've been given to understand otherwise is that once the investigation ends from the regulator's end, there is a possibility that the regulator might look to take some serious action against Star Health Insurance for all these lapses.
Yash, thanks a lot for that. At the lowest point of the day now is Star Health Insurance, 3% lower on the stock at 348, well below its IPO price as well. Moving on then, the other pocket that was in focus over the morning, and that was courtesy Donald Trump's threats on Venezuela, has not seen a very significant impact. Are these companies, ONGC and the oil marketing companies, HPCL, BPCL, but stocks like MRPL are taking it a bit on their chin. Sudarshan is joining in with more details on this. Sudarshan.
So as you said, overall the impact is very minor, but nevertheless there is an impact, and it's because of that US President Donald Trump has announced that he'll be imposing 25% tariffs on all the countries which are looking to import oil from Venezuela, and that would be effective April 2. Now, which all companies, Indian companies, can be impacted? So first on that list is ONGC. Why? Because ONGC has a subsidiary with the name of ONGC Videsh, which has 2 plants in Venezuela, and through that they used to produce crude oil. Second point for ONGC is ONGC was looking to recover dues, and the dues are of more than $500 million. So ONGC was planning that they can recover that dues by getting more crude from Venezuela. That is unlikely to happen. That's the reason ONGC is impacted. Now coming to oil marketing companies. If you remember last month, Oil Minister Hardeep Singh Puri had said that he is looking to increase the crude oil imports from Venezuela because Russian crude discount that these companies used to get, now that has been narrowed after the US sanction. So he was looking at an option, and that option was Venezuela. So that is also unlikely to happen. Now, but also, if you look at the overall imports, in 2024, there was hardly any crude oil imports by these oil marketing companies from Venezuela. The last time they had seen the imports was in January 2024. So overall, it's a minor impact, but nevertheless, it's an impact.
Thank you so much, Sudarshan, for joining us and giving us a sense of what exactly is transpiring as far as the oil and gas space is concerned. In fact, earlier today, we spoke to Probal Sen, Senior Research Analyst at ICICI Securities, to understand how the imposition of additional tariffs could affect India. Let's listen in to what he had to say.
My understanding is that India imports close to about 0.2 to 0.25 million barrels a day of oil from Venezuela. When you consider that India's total imports are in the range of around 4.5 million barrels of oil per day, obviously it is a relatively small percentage compared to the percentage from, let's say, Middle East or even Russia, for that matter. But the fact is that if the condition for avoiding this additional 25% tariff is that this oil will have to be replaced, then that's an additional sourcing that you will have to find from somewhere. From a supply security perspective, I guess because it's less than 5% or less than 4% of our overall crude slate, it's something that I think India can figure out how to basically manage this hit, from what we can tell.
That was Probal Sen of ICICI Securities there. And let's also focus on the CRDMO sector, where Kotak has issued a note on the sector and has initiated coverage on some of those stocks from that space. Vinny is here to tell us more on that. Vinny.
Yes, Kotak has issued and initiated coverage on some of the CRDMO space. CRDMO is Contract Research Development Manufacturing Organization. So they are third-party manufacturers, somewhat of that sort, to make it easy for pharma companies. Now they've initiated coverage on PPL Pharma, buy rating, target price of 300 rupees per share. Syngene is another one, buy rating, target price of 700 rupees per share. And Sai Lives, they've initiated coverage, reduced rating as of now, and target price of 875 rupees per share. What they say and what factors they believe will work out well for these companies: one, the rising focus in terms of the research and development outsourcing, that may continue to inch up going forward as well. In 2005, it was somewhere around 18%, and now it's become 42% across the globe. So that is an increase coming in. Plus, we have seen that shift coming in where everyone wants to reduce their focus on China and come to other countries. And that is what is something that could work out well for Indian CRDMO companies as well. So that rising shift from China will augur well for these Indian companies. Other than that, they expect the CRDMO market to even quadruple over the next decade. So that is important to watch out for in terms of the growth opportunity that they see coming in for these companies. And that is why they have come out with a note on this. Most of them are a positive rating that they've given here.
Thank you so much, Vinny, for joining in and giving us a sense of what exactly Kotak Institutional Equities had to say on the CRDMO space of Indian pharma companies. Let's now slip into a short break. We'll get him on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. Now the race to acquire Jaiprakash Associates is under the IBC is heating up. Now Ritu is joining in with all the exclusive details. Ritu, what are you picking up?
Well, Hormaz, over 24 suitors led by some of the largest conglomerates in the country are lining up to acquire Jayaprakash Associates under the bankruptcy law. We've been given to understand, the names of Adani Group, JSW Group, Oberoi Realty, Vedanta Group, Wellspun. These are just some among the 25 plus suitors that have come forward to submit expressions of interest for the company. We've been reporting the deadline for the submission of EOIs will end later today, and bankers are expecting a few more players to come forward before the close of the deadline, which has now been extended 2 times before. But given that NCLT had disallowed bids for individual business clusters of JP, suitors are now allowed to only submit bids for the company as a whole, and that includes its interests across real estate, cement, hospitality, engineering, constructions. It's a fairly large conglomerate, so you can see the kind of interest that is coming in from various companies for various assets that are looking to acquire the company under the bankruptcy law. Now, Jayaprakash Associates is facing claims of more than 57,000 crores under IBC, and we had reported sometime earlier that the SBI-led consortium of lenders have already sold their stress loan exposure to JP to the National Asset Reconstruction Company and received about 1,800 crores in cash. The rest they'll recover from security receipts through the sale of the company via this IBC process. Now, keep in mind, though, this is just the EOI or expression of interest stage. After this, the final bids are going to be invited, and we'll then have to see how many of these 20 plus suitors actually bring serious offers to the table.
Thank you so much, Ritu, for joining us and giving us an update on this very, very important story. Remember, earlier 2 bits and pieces of that particular group were looking to be sold. Hormaz, if you recall, some cement assets, etc., were going to be sold to Dalmia Bharat, but that particular deal didn't go through. So it's going to be very, very important to see, what are the number of expressions of interest that do come in, and finally, via the NCLT route, who finally bags these assets. And also, there's a significant debt over there. So, the entire banking pack will be looking at that particular development in quite detail. But what's actually worked for the market is that in the last half hour, we've actually seen quite a bit of recovery come about as far as the market is concerned. The Nifty, that was trading in the red is now once again back in the green. And a whole host of large cap names, especially look at some of the OMC stocks, they recovered quite sharply. Names like BPCL, SPCL, ISCL, BPCL, in fact, now trading near the day's highest point. JSW Steel, that particular stock too, is now trading near the day's highest point. So it's been a sharp recovery, especially in the last half hour, Hormaz.
Oh yes, and Nigel has a very special nugget on JSW Steel, which he will be presenting in during closing bell. So do stay tuned for that one. At the highest point of the day, as Vivek was mentioning, is JSW Steel. What is not doing very well though is Zomato. 5.5% lower now on the stock. The second worst performer on the Nifty 500, and that too, interestingly though, despite the fall that the stock has seen, its record high is around about 304, 305, and the stock fell to around levels of 200. And despite the correction that it has seen, it has held on to that level of 200 on the downside. So it'll be interesting to see whether it still holds on to those 200 levels even after this kind of correction. But shifting focus now to the cement space, UBS has upgraded cement stocks like UltraTech, Ambuja and Dalmia Bharat now to a buy recommendation. The brokerage is saying that the rough patch is ending for this sector. Nigel is here with more details on that.
Well, that's right. UBS has gone ahead and they have upgraded the cement sector. They believe that the rough patch is coming to an end, and so they've upgraded UltraTech, Ambuja, Dalmia to buy. Remember, UBS has a negative view on the sector itself all the way since July 2023. The key reasons they cited at that point of time was rising competition, the demand slowdown because of the general elections, and also price competition because Adani had entered the cement space. But now, UBS, they have turned positive and they anticipate the earnings upcycle to emerge from this fiscal, that's FY26, strong EBITDA growth over the next 2 fiscals. Their positive stance is backed by demand revival, which will be driven by housing upcycle and the revival in government capex. They're also pointing out that the structural cost savings is going to help drive margins of the sector higher. And they believe that pricing could bottom out after the sharp fall that we've seen in the first 9 months of FY25. The sector consolidation has been led by 2 big players, that is UltraTech as well as Ambuja. The reasons for upgrading various stocks, and the chart should come up for you on the screen. For UltraTech, they believe that the company has shown strong execution in tough times. They've led industry both in growth as well as on margins. Their top pick, however, is Ambuja. That's because of the higher growth and the lower valuations. On Dalmia, they've done a complete U-turn. They had a sell rating, now they've upgraded it to a buy. While they maintain their positive stance and the buy rating that they have on ACC, because of supportive valuations and industry tailwinds. Put all of this together, UBS, after close to 2 years, they have turned positive and constructive on the cement space.
Thank you so much, Nigel, for joining us and telling us about what exactly is transpiring as far as the cement stocks are concerned. Quite a few of the stocks doing very well in the session. But with that, it's all the time we have on this edition of Mid Cap Radar Mutual Fund Corner. When we return.